Hey traders, Raghee here. Happy Wednesday, everybody. Welcome to Charts and Coffee. Great to see everybody. We're going to go ahead and take a look at some charts together, drink some coffee together. First thing I want to cover are some questions that, I need to stand corrected. So yesterday somebody asked me about the coin IPO, DPO. And then I got some questions. Well, Rog, what's the difference? And I think a lot of you probably know what some of the differences are because Spotify and Slack, I think, were both DPOs. So then the next question was, well, Rog, what do I need to be aware of with this DPO situation and coin? I'm just going to bring up Bitcoin as it comes up. So again, this is a conversation that started yesterday. It's not an IPO, it's a DPO, it's a PO. But what's the difference? They don't go through the financial institution. So there's no holding, there's no lockup. Again, you're probably already familiar with some of the mechanisms and the behavior because if you traded spot, if you traded Slack, you're already sort of familiar with the workings of a DPO. Why would someone go the DPO route? Well, of course, you save money by foregoing the financial institutions. But the bigger narrative is you're not really looking to raise capital. What you're going to do is the folks within Coinbase now get to have their interest converted to stock. And so because there is no holding, those people can, if they want, can liquidate some of their positions. So look, it's not that one's bad and one's good. It's just as a trader or an investor, be aware of some of the differences. And, I would love to see more companies go the DPO route versus the IPO route. So I just wanted to tackle that right off the bat. Folks ask me, am I going to buy it? No, I won't treat a DPO any differently than I treat an IPO. And so I do want to focus on the potential for opportunity down the road. The other question that I got a lot of is, let's jump on over here, is do I think Bitcoin's going to rally because of it? Probably because your sheeple retail trader doesn't realize the understanding of the discounting mechanism. It probably will. It might, because people will assume that, again, it's just more of the, I'm going to make a word up here, mainstreamification of crypto. I've been a crypto believer. I have to credit my history of Forex for the past 20 plus years, because really for me, crypto, I just call it digital Forex in-house. That's what it is. And so most of my crypto investments, because it is an investment, I remember when I bought it, my cost basis is ridiculous. I'm not going to go, flex my cost basis on Bitcoin, but needless to say, it's very low. And the thing that my husband said, how long are you going to hold it for? When he saw it quadruple, 10x, quite frankly, at this point, way more than that. He said, how long are you going to keep it? I said, until they've mined them all, right? I looked at it as real estate. And when everything's developed, and that's still, 2040, I'm just going to hang on to it. I really am not, it's not a big part of my portfolio. It's something I own. I own a little bit of Ethereum. That's fine too. No Doge though, no Doge. So anyways, that is DPO versus IPO. I didn't want to spend much more than a few minutes on that because I did get a bunch of questions. Is Bitcoin going to go higher? Bitcoin was going to go higher with or without coin. Some of Bitcoin's rally, I think, is because of the anticipation of coin. No, I will not buy coin today. I'll see how the dust settles. Again, you've seen DPOs because you've seen the way Work and Spot went public. And again, remember that it converts interest in the company to shares. And there's no rule that today an insider couldn't take some profit on the open. Anyway, so that's the deal with this DPO today. It's going to be the big news. Let's take some questions. And that was the first question. So that worked out really well, Nicholas. Yeah, that was something from yesterday. I don't really treat a DPO differently than an IPO. There just are mechanics underneath when you forego the middleman within the process. Okay, so that is that. Let's see. Next up is this market needs a breather. Nikolai, I don't know that I subscribe to the market needs to do anything, right? Macro folks will give you one argument. Technical folks will give you another argument. This market can continue to do whatever the heck it wants to do. But if you want to understand what it's going to do next, I got to tell you, if for those of you that are on the Simpler Trading YouTube channel, let's jump on over there. Am I logged in? I may not be, but just look up Simpler Trading on YouTube. Head on over to the channel. Make sure you subscribe, because then you're gonna get all the different updates that we have, including if you go into any one of the individual videos, and there's a bell icon here somewhere. That way you can get notified when different content is available. But I subscribe to the channels, and I probably follow 24 channels. I subscribe to the channels that I want to follow because I want to know when their newest content is coming out. Heck, I subscribe to our channel. So check out this video right here. In fact, I'll push it through in the chat. So this was yesterday's video where I talk about what sectors to trade now and why is that important to a futures trader. Clearly, it's important to a stock and ETF trader, but why would that be important to a futures trader? And why is that so applicable, Nikolai, to your comment and question, which I don't disagree with you, my friend, but here's what I know. Until I can write checks and the bank bounces, I'm not moving this market, and the market could care less what my opinion is. And so could we talk about this market having gone parabolic? Absolutely. Absolutely. However, the sectors within, and remember, Coinbase is sort of eclipsing a very big narrative right now, which is the earnings season kicks off today before the bell. Goldman, JP Morgan, Wells, Bank of America, BlackRock, Citi are tomorrow. So we have a huge, huge day in terms of kicking off earnings season with all these different high impact, high volume, high volatility events. These kind of hot zones, gang, whether that's the hot zone of a Fed event, earnings, CPI data you saw was a heck of a hot zone yesterday. Whatever that is, keep in mind, XLF is what? Second heaviest weighted sector within, I believe, the S&P second, or it's a top three. Those things shuffle around a little bit, but XLF can impact what's happening in the S&P a whole heck of a lot more than a coin DPO will. So I'm with you, but as long as the guts of the market are moving higher, remember, Google is weighted within the S&P heavily. Amazon is weighted heavily within the S&P. So know the weightings of these individual stocks. And until those stocks start to look like they're getting heavy, I am very bullish, gang. You know, I've been very bullish for a while. Why? It goes back to macro. When did I turn bullish? When actually did I tell my futures traders, you are not allowed to short stonks? November 3. So this is not a new shift for us. Stick with the long side. Why? Because those very slow moving but important tectonic plates of macroeconomics, inflation, GDP, monetary policy, money supply have been indicating, gang, don't step out in front of this freight train. Simple as that. All right. Thank you for that question or comment. I appreciate the discussion. All right, Patrick, how are you? Good morning. Thanks for the countdown, Trader 123. Yeah, you know, big thanks to Trish. She said, look, Rag, a lot of people are asking about this. They love that it's Dow theory. They've never maybe thought about this before. We actually, well, if you go back even further, by the way, after Charts and Coffee, for example, yesterday, and I am a huge, how many of you guys know Allison Ostrander? You guys are probably familiar with Allison. I'm a huge fan. I love the way she looked at the market. She looked at the market out of the box. The reason I'm bringing that up is yesterday, right after Countdown Trader, Allison had a creating order entry checklist video, which was great. Do check that out. But if you go way back on the videos, before the NAS broke out, I showed you guys what the 1, 2, 3, and we've got to go way back to even find it. But I encourage you guys to, John had a great update yesterday. You know, what's he expecting? He just had a complete rocket ship of a trade in Google. He just rocked that one. And he's looking at Amazon now. Is Amazon going to affect us as futures traders? 100%. So check out the videos. But if you scroll way back, I mean, we're talking a few weeks, you'll see I walked you through the 1, 2, 3 on the QQQ. And I think it's really important to talk about these patterns as they're happening so you can train your eyes. So go back and check out some of those older free videos, the Simpler Futures free videos. I think you'll find it a terrific complement for the, and this might have been it. I don't know if this was it. Oh yeah, here it is right here. March 24. This is when I was calling for the 1, 2, 3 gang. March 24. So once you understand that pattern, and definitely check out the update. Now, for those of you who don't know what a Trish is my right hand here in the office. And that was one of the patterns we said, gang, this is something we need to explain to people so they understand the power of this 140-year-old logic. And it's very simple. And it will give you insight into a lot of other patterns that have come since that are really rooted in this Dow pattern. All right. So my pleasure, Patrick. I got to give credit where credit is due. So I appreciate that. James, how are you doing, my friend? James, and those of you that are in the Sector Secrets Mastery, we are going to be kicking off the Wednesday session, 9:20 to 11:30 here in 8 minutes. I'll see you back in the room here shortly. And so we will be doing a little bit of options day trading, a little bit of scanning together. But what is going on with BYND? James, I would view this more as a reversal 1, 2, 3, not the continuation variety that I explained. The next update we're going to get, or maybe not next, but in the coming weeks, make sure you subscribe to the Countdown Trader at countdowntrader.com, by the way, for these updates that I'm referring to. So this I would review as a reversal 1, 2, 3, not a continuation 1, 2, 3. So getting above the wave, you can see where the harmonics, this is just some harmonic zigzag patterning. And you can see where we want this swing high and the top line of the wave to get broken. Yeah, we can dive into this a little bit more when I see you all in that Sector Secrets chat room. But I do like it. Good eye. Boy, you're a quick study. James, yeah, really good eye. I know you've been front running some of the trend reversals by using this pattern. It gives you a tremendous edge before the market breaks like it did in the NAS. So good stuff. Good eye. All right. Next up is, could I comment on Amazon's price surge? Well, I'd love to say this was a clean 1, 2, 3. It was a 1, 2, 3. Let me show you guys. It's really simple. Now, you might say, Rog, there's other patterns that I'm seeing within this pattern. And that's probably true. Again, Dow influences pretty much everything that I do. Dow theory, Charles Dow. And most of these approaches, most of these ideas were the late 1880s. So having been a trader in the 80s and 90s, we didn't have these monster expos. We had to go to seminars. There were no webinars. We were still working on under 14.4 baud modems. So what we had access to was pretty limited. And what I had access to as a young trader was sort of the ancient philosophies of trading. So this was one of them. Here's your lower low. Here's your swing high. Okay. Here was your retracement. This actually was the break. And you might say, oh my gosh, Rog, it didn't keep going. That's okay. As long as it doesn't break the lower low. This, as I teach our folks, is really a tremendous opportunity. After we get the confirmation, the market, in other words, almost tips its hand and says, yeah, the trajectory is going to be up, but it pulled back. No problem. That's where you get to build your position. That's where you get to build your position. This is where you get to get long calls. This is where you can go with a put credit spread. When you're taking advantage of a momentum trade like we have here, you've got to go with a call debit spread. You've got to offset the cost of something as typically cost prohibitive to most traders as Amazon calls. But this is the momentum breakout. But remember, it actually began back here with that small, very nearly unnoticeable candle on March 2-3. So the price surge, now what am I going to do with this? Look, I need a pullback. A pullback to where? Well, let's talk about that. I'm happy to discuss that. How much of a pullback would I like? Look, gang, I love moving averages. You guys know I'm the girl that does the wave, 34 EMA high-low close, grab candles, plot because of the wave, propulsion dots, more exponential moving average logic. But more important than anything, and this was part of my submarket sonar class we did, I guess about 2 years ago now, is where is the volume? Where is the size? If you're asking me what I'm looking for, it's right on my chart, gang. Very transparent. It's right on my chart. No secret squiggles here. No magical indicators necessary. Where is the size? Where is the point of control? This is volume profile analysis 101. That is a volume ledge. That is where there's conviction. If I can get a pullback, that's a shallow one. But if I can get a pullback there, I know it's aggressive, but I'd be right as rain about it. That would be terrific. All right. So price surge means, yes, we've gone parabolic. Amazon's playing a little bit of catch up, I think, to the and by the way, it's going to cause XLY to move higher, but a little bit of a pullback is all I need. Not that different than this 1, 2, 3. A little bit of a pullback after I'm certain that I want to be long is the key. Okay. Hope that helps. Do I like Tesla? Hey there, Christian. Do I like Tesla? Look, it had a great day. You're going to say, Rog, is there a 1, 2, 3 here? Well, actually, there was. There actually was. Again, look at your lower low here, swing high, retracement. Look, if I can get this retracement at least a 50% or 618 of this low to this high, and check out Countdown Trader. I go into a lot of detail about this pattern. Getting above this swing high is the key. Is that surprising to anyone now that you understand the way this pattern works, that the momentum kicked in here? Taking out that swing high within the context of this pattern is the key. So this was also, as you can see here, breaking the wave, 34 EMA wave. Love that. I think that ultimately, and by the way, for those of you wondering, Rog, do you use harmonics? I really don't. I use some parts of harmonics, meaning some of the Fibonacci ratios and the balances of the pattern, but sometimes the harmonics were actually indicating that we could be lower. So I'm not paying attention to those. However, having said that, could Tesla continue to move higher? It could. Remember that this is not just a QQQ and SPY conversation, heavily weighted within both those indices. This is also an XLY conversation. So some folks might say, Rog, if Tesla's moving higher and Amazon's moving higher, does that mean that we could see XLY move higher? And the answer to that is absolutely yes. So it's a less expensive way to engage in consumer discretionary with heavy weighting in those two stocks. That's the sector secret, the not so secret. How do we use ETFs not only to gauge relative outperformance, but how do we use ETFs as alternatives, more affordable alternatives to bet on the tide, as I say, and instead of individual boats. All right, hope that helped. Let's see here. I got a bunch of questions again coming in. For those of you that might have joined late, check out the replay. Will be done here in just a minute. I did cover the coin DPO versus IPO conversation for the first about 5 minutes of our charts and coffee today. All right, can we take a look at, and for those of you asking, how does the Dow 123 work? Head on over to countdowntrader.com. I've got a fantastic explainer plus about a 6-minute video that walks you through the details. All right, we're going to wrap this up with a conversation about XLE and crude. Gang, this has been a frustrating one for me because the reflation trade has been deflated in many ways by the new love affair the market has with high beta, high momentum, and the surges we're talking about and seeing in tech. All right, so what has been suffering? I think we've seen some of the relative outperformers in industrials, transports, and the Dow sort of lose a little bit of the popular kid in class status. And part of that has been some lethargy in crude oil and the crude oil stocks. But as I've said, and we've talked about this in the Simpler Futures premium videos, we want to be long crude on the lower end of this consolidation. The trend with previous was up. We have a fantastic opportunity to build that long position, benefit from higher crude prices. And I'm going to look for oil stocks to move higher with crude. I'm going to look for oil stocks to move higher with RBOB gas. So I'm very optimistic about energy. Yes, the reflation trade is taking a breather. It will be back. And keep an eye on the US dollar. All right, that's going to help. It's not necessary. Crude can move higher without dollar weakness, but it sure will help give it a little oomph. All right, with that, gang, I'm going to go ahead and get on out of the way here. I'll be heading on over to the Sector Secrets Mastery Room. Check out the Simpler Trading YouTube channel. We're releasing new videos all the time, aside from the free videos that we do every evening. Come check me out in the Sector Secrets Mastery. We would talk a lot more about 1, 2, 3s, options trading, and the kind of scanning that I do, focusing on relative performance. And until then, have a terrific day. Heads up, again, we're kicking off earnings season as of today. And I will see you tomorrow. Same time, same station. All right, gang. Have a great one. Be good to each other.